Hey, my name is James Nicholson and welcome to my YouTube channel. In this video, I want to talk about why investors most commonly use something called an interest-only mortgage. What is the mortgage? What are the benefits? What are the cons? And is it something that you should consider if you're going to be an investor going forward? Now, if you're new around here and you haven't done already, do make sure you subscribe to the channel over here and hit that bell notification. If you have a look around this video somewhere, you see we are a smidge away from 40,000 subscribers. And let's get some more views on this video so people are aware of the benefits of an interest-only mortgage. How do we do that, you ask? Simple. Smash like, tick or like, do something to the like button. That helps with the YouTube algorithm and really helps the channel grow. Maybe even share this video and WhatsApp it, Facebook, or email it to someone as well. So, we want to talk about interest-only mortgages right now. And really, what is an interest-only mortgage? Well, let's look at the two types of mortgages. Firstly, let's look at repayment mortgages. Now, a repayment mortgage is if you have a residential property, the home that you live in right now, and that has a mortgage, 99% of those are going to be on a repayment mortgage. So let's just say you had a mortgage debt of 100k, and this was 25 years that you'd borrowed it over. So over time, as you go through that mortgage, the debt is going to go down to zero. So eventually you will own that property outright, meaning you don't have any future costs, which is really beneficial. Now, on a residential property, that's what the mortgage lender wants, because your opportunity to earn income shrinks as you get older. You'll retire, then you'll go on a pension, which is likely less each month than you earn in a job. And so that's why banks want to make sure that any mortgage they lend you, the period of time, 25 years, if you get to your 50s and 60s, that will shrink. They won't lend you 25 years at that point. So it's very important that you take that into consideration. So that's how repayment works. What about interest only? So on an interest only mortgage, if you borrowed 100 grand in 25 years, you would still owe £100,000. Now that worries a lot of people. Why would you want to do that? You want to get the mortgage paid down. Well, let's have a look at what the benefits of the interest only are. First and foremost is lower payments. And so a landlord particularly wants better cash flow. So they want a lower monthly payment. So in the repayment mortgage, you are paying the interest, but you have a second part of the payment here, which is paying down the debt that you owe. And so that means that maybe on a 100 grand mortgage, it might be £500 a month that you're paying, for argument's sake. And on the interest only mortgage, it might only be 300 that you're paying. So the landlord would want that option to give them more cash flow. That's very, very important. Now, you also, by having this, get leverage. So what do we mean by that? Well, when a bank lends to you, they want to make sure that you can afford the monthly payment. That's very, very important here. And you'll have to put in a deposit in a buy-to-let mortgage of around 25%. Now, if your income from the rent isn't high enough to make sure that you can pay that mortgage payment to them, then you'd have to increase your deposit and actually borrow less money from the lender. So having a lower monthly payment because it's interest only gives you leverage, means that you're likely to be more likely to be accepted at the 25% part. Now then the leverage part comes in, that if you've got extra money or you release some equity, you can then get a second property and you're leveraging that money there. You're also leveraging the deposit you put in, because you're putting in 25% of the value of the house And the bank is lending you 75% of the value of the house as well. So that's another important part there. Next is inflation. So we didn't talk about inflation for decades, or most people didn't. It wasn't a topic, but inflation has been biting us in the UK and America and around the world for the last few years, because the government's printed so much, or the central banks even printed so much money that caused goods to spike in costs, and we paid for that with inflation. Now, inflation on debt is good, because your £100,000, if you think about what you could buy with £100,000 in 2020, now in 2025, you can buy considerably less because things have gone up. Maybe that's a car, maybe that's a property. The value of that £100,000 has been eroded over the last few years that we've had high inflation. So the debt that the landlord has, or the investor has in this scenario, is reduced in real terms. And over 25 years, that debt will be much easier to manage. And that's important here. Cash flow is very important to any business, especially a property business. And so having this lower payment in this scenario gives you improved cash flow, which we said already. And that's important not only for you as the landlord, but also the bank. The bank won't lend you money unless the property makes money and it stacks up that deal. So they want to see you make cash flow, because if they don't, they won't lend you the money, or that property would get repossessed and they might not get the full amount of money back when they sold it in an auction. So that's important as well. It also gives you, it's flexible. So an interest-only mortgage, you can still pay down 10% a year like you can with a repayment mortgage. So you've got that option out of the cash flow to do that. And you've got the flexibility with the money that you have and exceed the rent with a repayment mortgage. You can then invest that in stocks and shares or in other properties and other things. So that gives you that ultimate flexibility on what you want to do with the money. Whereas when you're on a repayment mortgage, you've got to pay the bank every month. There is no choice about that. You can't invest in other things as well. Now, what are the downsides on this? Well, the downsides are your debt's not eroding. It's staying as it is. 100 grand that you borrow today is 100 grand still that you owe in 25 years. So you need a plan to pay that down. And what is that plan? Well, for me as a buy-to-let investor, my plan is I remortgage. I take out a new mortgage and I get another 25 years in order to pay that down. Now, because I'm an investor and it's not a property that I live in, the bank doesn't necessarily care about my age. They care about the income from the asset, the property. Is the rent paying the right amount, and are we making profit still? If that's the case, you can still get lending even into your 70s. There are lenders that will do that. So that is a great option to have. You're not automatically building equity. So with this, the repayment, as you pay down your debt, you're getting equity in your property. In an interest-only mortgage, you're only going to get equity in the property if house prices rise, which they normally do. On average, house prices double every 10 years, but not in all areas. There are still some areas up north where house prices haven't increased since 2008, nearly 20 years later. So you're not automatically going to get that. What you've also got here is tax efficiency. If you have a property in a limited company, you can claim the interest payments back each and every month. That's the best way to do it. And you can only do that on the interest payments. So if you're doing the extra on repayment, that's not going to be tax deductible. You've got to speak to an accountant on that sort of stuff, but it's way more efficient to just pay the interest in a business. So look, if you want to invest in property, that's how you do it, with an interest-only mortgage. It's the best way to leverage your income. It's the best way to make the best cash flow. and it allows you to buy multiple assets if that's what you want. If you want to know how to invest in property and make money in a down market, we've got uncertainty in the market right now. We've got a free ebook, which I'm going to link below, which teaches you the best strategies that you can use today in order to maximize rent and profits in a down market. So do check that out. Do smash like, do subscribe. Let's get to 40,000 subscribers. And make sure you check the content over the next few days. We've got the Federal Reserve talking interest rates tonight. We've got the Bank of England tomorrow. We've got inflation data next week as well. This is all going to have a big impact on mortgage rates that we get, and that's why you want to make sure you subscribe to know that. Do check out all the other content on my channel as well, including this video right here.